stock and bond market returns are negative for the year. Therefore, there's less money sitting out in those parts of capital allocation. And then you look at the economy, money is being sucked away by labor. Labor costs are going up. The cost of goods in general are going up. So watching liquidity disappear is not good for the stock market either. I mean, this is set up to be one hell of a terrible era ahead.
Good morning, good afternoon, good evening. I hope you guys are well. We're going to get straight into this video with inflation rising at double digits and at 8.6% in May earlier this year. And we have now had some confirmation from some banks reporting targets in January that inflation in the double digit is going to hit and peak around anywhere between 18 and 14%, which is extremely high here in the UK, which marks the highest inflation figures since the early 1980s. We've seen the worst year for the stock market since 1967, and things just keep tumbling. Recently, we did see an accelerated growth in the SPY and of course the NASDAQ, and only in the last couple of days have we seen a crashing back down of 4 and 5%. So what is the reality right now for us as investors? Where should we be placing our money? And also, we're going to be talking about some of the earnings that have been coming out in China for Xpeng in this video. We're also going to be analysing one of our favourite stocks, which you guys know I love to talk about on this channel, Alpine 4, and again we're going to be looking at the general market as an update. I hope you guys stick around. If you do find value at any point, my name is Jason. Please go down and like that button for me. It really does help out with the channel, and also don't forget to subscribe as well so you can stay up to date on stocks and all of the information that we bring out here on this channel. So first things first, let's quickly go over the earnings for Xpeng stock because we did actually have that out in the last 24 hours. And if you guys look up on the charts, you can see that Xpeng has sold off dramatically. We did see these levels back in 2020, 2 years ago. We have since tested down twice before. So this is at a major area of support, which is what I love to line up technically on a graph. We are oversold on the RSI, which does mean we are going to bounce at some point and we will come back into that curve. I am going to be making a course over the next few weeks, I have decided. So if you guys would like to learn how to technical trade, then also let me know below in the comments if that is something that is important to you, because I want to know what type of content to create that course around if you guys are going to be my core audience. I've had a lot of people request that over the last year, but I have decided to knuckle down, and I do have a free time now between Tuesdays and Wednesdays where I can get everything out, and in the next few weeks I will be able to get that out for you. And I just want to go over their earnings call because they had an estimated loss from Wall Street on 1.1 billion of sales of about 288 million, and they actually lost about 368 million. So if we come on to their earnings, we can see that the stock is down over 11% yesterday, and it's now trading at $18.73. So again, it has jumped down dramatically. They are saying that this was also due to the fact that the EV manufacturer has its operations in China, and again, it has been affected since 2020 with weathered, struggling economies, COVID lockdowns, government crackdowns of tech companies, and recent power restrictions in key provinces. As you guys can see, Xpeng is peers including NIO and Li Auto and BYD, which are three other companies I do hold inside my portfolio. I do actually hold Xpeng as well. All of these positions, guys, don't make up more than about 5 or 6% of my entire portfolio position, just so you guys know. But I am currently invested, and I do like where they are at this time if you're looking at them for the long term. Now again, their total vehicle deliveries for the second quarter increased by 98% to 34,422, but they did give a lower guidance for the next quarter of around 30,000 vehicles, and because that is a decline quarter over quarter and they're expecting to produce less vehicles, this is where the pressures come in and people are selling off the stock in the short term. There will be a lot of options traders that will be pushing that stock down, and again, because they are actually declining and those revenues are not going to be moving up over the next 4 months, that is why the stock is selling off. Obviously that's just common sense. Xpeng currently has 3 vehicles lined up, they are saying as well, and our deliveries sustained robust growth momentum in the second quarter despite unprecedented circumstances brought in by the resurgence of COVID-19 in certain areas of China. And we have to remember that China is dealing with COVID in a very different way to the rest of the world, because they are still undergoing certain lockdowns again in certain states where COVID again is slightly out of their control. Now, if you are someone that is bullish on electrical vehicles, you have to remember that the ARK Invest website does actually govern an entire report on how we are going to move over the next 3 to 4 years into 46 million electrical vehicles sold across the world, which is currently around 6 million today. And most of those will be in China because their technology and again everything with the government, they are pushing for electrical vehicles. They have to get those global emissions down. In China, they are out of control compared to a lot of the rest of the countries around the world. So again, it's important that if you are investing in a company like this, you understand the fundamentals, why it's down in the short term, and of course what your long-term or short-term goals are to hold this stock. Again, in my eyes, I think that this is clearly a very good direction buy in the long term, but we are going to see, like I said, we're going to move into understanding a little bit more about why inflation is so out of control right now and what that means for the stock market in the next 12 months. I do think that's going to put a lot of pressure, as we did see in that clip at the start, in the next 12 months on growth stocks. Value is going to be traditionally where most of the money is kept right now for stocks because they are safer, and also in dividend stocks because dividend stocks are going to continue to pay people out those monthly dividends, and they are also going to have a lot more stability and they're not going to be as volatile. That is just something that we've learned about the stock market over the last 20-30 years, is that dividend stocks do not move as dramatically as growth stocks particularly, or value stocks. So that is where a lot of the money is being held, and because inflation is so high and everything is very unpredictable right now in the short term, a lot of people have feared. There is a lot of shorting in the market, there are a lot of people selling stocks, there is a lot of options being traded against stocks again, and until we see a settling peak of inflation where we know we are going to then have a turnaround, that is when the markets are going to push back into the space of innovation and into growth. Now again, I follow ARK Invest very closely and they have a long-term time horizon, and a lot of the stocks that I'm currently holding in my portfolio also have that. And right now the stock market, if we come onto the SPY, we can see that we did actually shoot back up after we did have a massive sell-off. I would consider this a crash, guys. We did actually come back down quite significantly over the last few months. As we all know, it has been a very, very painful time for the long-term stockholders, especially if you are in the growth and innovation space. And again, we have now come back up. We have tested onto that 200-day moving average, the 50 moving average, and again, we are now moving back down between. So we have come back down onto the 50 on the RSI as well, which does go to show me this is going to act as an area of support. If we do break down from here, then we will probably retest back down onto this line of 381, which again could happen in the short term because the headwinds of the stock market are now also based around what is happening with the global economy, and because we could potentially be going into this recession quite heavy, there are also some tensions between Taiwan and China, which I could make another video on. If you are interested, then please let me know below in the comments and I'll go into further detail. But essentially, the Taiwan and China have had tensions for a very, very long time. China wants to take Taiwan back. It's something that they have always said. They are constantly putting out military action around Taiwan, and they are doing military exercises to showcase their power. And Taiwan, of course, is one of the largest manufacturers of chips in the world. So if anything is to slow down that process, then of course you're going to see companies like Nvidia, where they actually get a lot of the supply of their chips from Taiwan in some of those other companies, then we are going to see a slowdown, which is going to have a chip shortage. And we all know what happened when there was a chip shortage over the last 20 months. Things went out of control, turmoil happened in the stock market, and we have since had a crash. So if that puts extra pressure on, if China put extra pressure onto Taiwan, then again this could also lead to further momentum in the short term to the downside. We don't know exactly what is going to happen, and again, if you would like me to cover a video on this information in more detail, then please do let me know. But right now, all I know is that there is a lot of tension there. I don't think China will act, because if you look at what's happened to Russia when they acted, and they did exactly the same with Ukraine, but then they entered, and now they have basically been cut off from the rest of the world. And of course, we all know what is going on there, and it is not good at all. And I really don't think that China would be that stupid after seeing what's happened to Russia, because they would also be completely cut off from the rest of the world, and it would put them into a massive recession, which would also then spiral into a global recession as well. So that is the update on there. We've also got some headlines out, which I just want to briefly go over. We have inflation obviously hitting high in the US, but we have also got inflation in the UK, like I said, and we have these articles coming out from Citigroup saying that inflation could potentially peak in January, up anywhere near 18.6%, as of course the gas prices have been surging. And again, that's also due to what happened with the war in Russia. And we have so many tailwinds right now, unfortunately, which is unfolding negativity into the stock market. But again, you just have to remember that this is the worst year that the stock market has seen since 1967. And if anything has been taught to us throughout history, it is the fact that we know the stock market does recover, it does rebound, and if you are invested in the right companies for the long term, then there is no reason why you cannot do well, especially if you are a long-term investor for 5 to 10 years out. If you just look at the SPY coming back to 2012, for example, when the SPY was all the way down here, again, so much further, 80% down from where it was, and look at the basis points. You've had so many dips, troughs, and crashes during this time. You've had so many peaks and troughs, and again, we've just had one again right now. So there's no reason, guys, why to run out in fear and sell all your stocks right now, because again, the short-term momentum is down. It just means, unfortunately, that it is a painful year for stocks. But like I said, history has taught us, if anything, and we do have cash on the side, these are the times potentially to average down. Right now, I'm actually just accumulating as much cash as I can until I definitely know inflation is going to be capped at a certain level, and that is when I will slowly start to inject some more money into the stock market, and I can start then reallocating my funds where I would like to position them. I also think that I had made some mistakes over the last few years, and I think my portfolio, even though it is very diverse, it's good, it has different segments across all different industries in the market. I do think that I had held too many stocks again inside my portfolio, so I'm going to be allocating certain stocks into my funds, and I'm going to be just cutting down as soon as those stocks move up, so I can take my money out and I can have about 12 to 20 positions maximum that I know the companies inside out, and I'm super duper confident that those companies are going to do extremely well over the next 5 to 10 years, because again, I am in my 30s, so I have a lot of time on my hands, luckily, as an investor at this age. So that is my update right now on the stock market. Like I said, in the short term, I do think we are going to see some more selling pressure. I don't think this is by any means a massive rally now that we have rebounded slightly on the SPY and the NASDAQ. I think we probably will come back down at some point, down around that 400 mark. And again, we just then have to wait to find out whether this inflation fear does start to top off over the next few months, which isn't that far away. September typically can be a negative month in the stock market, and we go into the tax loss harvesting season. But once we do pick up, we all know that January is a very euphoric month. So we do have a lot of things to look forward to once January hits. And again, that way we should know a lot more about the global economy, where we are, if we are going to be into a deep recession, if we are not, where oil prices are going to be, and also how we are going to deal with this inflation throughout the UK and the cost of living. So that is my update for you right now. We're going to briefly just touch on Alpine. Like I said at the start of this video, I did want to quickly do an update on them. We can see that we actually did come up into that territory, overstretched on the RSI, as I said we would, and we would come back down. We are now back down again around the 50 on the RSI, which goes to show me that there is an area of support there. I always use this area, guys, as a support basis, and we then have to decide whether we come back up or if we in fact break down. And then if we do go below that 50, that usually does tell me that we are then in negative territory. If we stay above the 50 on the RSI, then it does show me that we are actually in bullish territory, and we can expect to bounce up again from that area of support and then move up to the next area of resistance. That's if I'm looking at something technically on a graph. If I zoom in, we are currently at 0.82, and it was funny because a few days ago we were actually the only green stock I saw for the day on my watch list. Most stocks were down at least 1 to 5% throughout the day, and Alpine was actually up 1 to 2%. So I did find that quite amusing. Again, we had some new news out, so let me just quickly bring up the Twitter. So it looks like Value Aerospace had released an article again with a schedule where you can actually go and see a showcase about their drones with Value G1, which is quite exciting. And again, they have a full list of the schedule for these 2 days of what they're going to be presenting. So that's some positive news again, that everything is underway, it's under operation, and they are now starting to showcase these products off and how they are going to be used for the future benefit, potentially with government contracts, etc, etc. So check out their Twitter if you do want to find out a little bit more information. Again, I'm still holding this stock. We just have to see how it just reacts to the short-term pain of the markets, and that again is our update right now on this stock market. So I hope you guys had a lovely time, enjoyed this video. If you did, then please be sure to go down there and give it a like. I am going to be covering Nvidia stock very soon as well, again in some big detail as soon as I get some time, hopefully this weekend, and I'm going to get another video out to you, and I'm going to be starting to crack on with this course so that you guys can learn how to read technical graphs. I can give you all the insights on how I find stocks, what I look for in a stock, and anything that I look for in revenues, and all of those juicy things, so I can help you guys become as professional at trading as you possibly can be. I hope to see you back on my channel soon. Make sure to hit that subscribe button, and I look forward to enjoying the rest of the week with you. See you guys soon. Ciao for now.